Good day, Junior Tickies. I'm Mrs. Brimacombe, and we are going to look at Activity 6 on tangible assets. You are provided with information for the financial year ended 28 February 2021, taken from the books of Bondley Limited, a public company listed on the Johannesburg Security Exchange. So what is required? Calculate the cost of the delivery vehicle that was traded in on the 31st of August 2020. And number 2, calculate the missing figures. So this is what is required from us. We are also going to look at other things, the same as what we've done in the previous activity. Before we continue, always make sure if your accounting period ends 28 February 2021, it means it starts on the 1st of March 2020. It's always important to understand when does your accounting period end, when does it start. If I look at the information given, they've provided me with a tangible asset note on land and buildings, vehicles and equipment. So we are now going to calculate each one individually. Starting with question 6.1. Calculate the cost price of the delivery vehicle that was traded in on 31 August 2020. So to calculate the disposal, the cost on the asset which we disposed of, you can open up a T account if you're not sure how to calculate it directly on the tangible asset note. We start with the balance in the beginning plus additions, which was 450,000, minus the cost on the asset which we disposed of, which we need to calculate now, equals the balance at the end. So they provided us with the balance at the end. So if we take the credit side and we minus the debit side, or if you take the debit side minus the credit side, the balancing figure is the cost on the asset which I disposed of, which is 300,000. It is very important that you attempt this question, because otherwise, moving forward, we need to solve the disposal at carrying value. And if I don't know what's the cost and I haven't attempted it and there's nothing written there, then it means I won't be able to calculate the disposal. Looking at land and buildings, a security office with a cost of 400,000 was completely destroyed in a fire. Instead of repairing the old security office, the insurance claim and additional funds were used to build a new security office in a different place on the property. So looking at the tangible asset note, we now have additions and we have disposals. So we first need to solve the disposal. So this is an easy mark to get. Why? They told me that the cost was 400,000 of the building that was completely destroyed in the fire. So our disposal is going to be 400,000. Now that I've calculated the disposal, we can find the additions. So to find the additions, again, if you're not sure, you can always open up a T account. The balance brought down in the beginning, plus additions, which is the missing figure, minus the cost on the asset which we disposed of, equals the balance at the end. So now the balance at the end was given. We can take the credit side minus the debit side, and the difference of 700,000 will be our additions at cost. Looking now at vehicles, a delivery vehicle bought on 1st of March 2019 was traded in on 31 August 2020 for a new vehicle costing 450,000. depreciation on vehicles is written off at 20% per annum on the diminishing balance method. Again, there's a reason why they provided us with the date, the 1st of March 2019. Our current financial year ends 2021. And if you also take note, they didn't provide you with the accumulated depreciation on the asset which I disposed of in the beginning, and they also didn't provide you with the selling price or if you made a profit or a loss on the sale of an asset. So how do I approach this? Where do I start? We start with the cost. Remember, in question 6.1, you had to calculate the cost on the asset which you disposed of. And that's why I said earlier, it is important that you at least attempt that question and write something, because you need to use your answer in question 6.1 to complete this. So if I go through the steps with asset disposal, step 1, take out the cost. Step 2, update your depreciation. Step number 3, take out the total accumulated depreciation. Step number 4, record the selling price. Now remember, traded in means our details will be creditors control. This is just to revise it. Step number 5, calculate if we made a profit or a loss. So if we look now at step number 2 to update our depreciation. Depreciation is calculated from the beginning of the accounting period until the day that we have sold it. So we have to calculate it for 6 months. But there's now a problem. I do not have the accumulated depreciation in the beginning. And we need to calculate the depreciation on diminishing balance method. Diminishing balance method means that I need to get the book value. And to get the book value, we take the cost minus the accumulated depreciation. If I look at the asset disposal account, they haven't provided us with the profit or loss or with the selling price. So now we can't fill anything in there to try to see if accumulated depreciation will then be our balancing figure like we've done in previous activities. So I've got now 3 unknowns. So to solve this, remember in the previous activity I said to you, if they don't provide you with the accumulated depreciation on the asset which you disposed of in the beginning, and they provided you with on the day that you've purchased it, that means I will need to update my depreciation from the day that we've purchased it until the day that we have sold it. And to do that, you can, and this is just a format that you can use, you don't have to do it in this way, you can open up columns to indicate the year, the depreciation, the accumulated depreciation, and the book value. And this is the part that actually appears on your fixed asset register. So if I purchase this on the 1st of March 2019, and our accounting period ends 28th February every single year, so it means that that first year from the day we've purchased it until the end of the accounting period, which will be February 2020, we will need to calculate the depreciation on the cost, which is 300,000 times 20% for 12 months will equal 60,000. And because we're calculating it for the first time, it means that the accumulated depreciation will be exactly the same. So to get the book value, we take the cost, 300,000 minus 60,000, and that equals the book value of 240,000. Now we can calculate the depreciation by taking the 240,000 times 20% times 6 over 12, and that equals 24,000. to calculate the accumulated depreciation, we take 60,000 plus 24,000. Remember, depreciation is always added to the accumulate. So the total accumulated depreciation is 84,000. Now we can calculate the book value. And to calculate the book value, we've got two options. We can take the cost, 300,000, minus 84,000, which is the accumulate. Or you can take the book value, 240,000, and we minus the depreciation. That will give you exactly the same answer, 216,000. So, to solve number 3 now, we can just take the answer directly from our calculation there in the register, 216,000. We don't need to complete the asset disposal account. In brackets on my tangible asset note, it's going to show 216,000. Please remember when completing the tangible asset note, 216,000 is the disposal at carrying value. Always show in brackets the cost minus the accumulate. Looking at equipment, Bondley Limited bought a printing machine on the 1st of June 2016. Again, our current financial year ends 2021, so there's a reason why they provided you with that date. On the 1st of December 2020, the company bought a new printing machine to the value of 65,000. No equipment was sold during the year. So we need to calculate the total depreciation for this financial year. So this means depreciation needs to be calculated on the new plus the old or remaining, that which we had since the beginning of the accounting period. To calculate the depreciation on the new, we have to calculate it from the day we've purchased it until the end of the accounting period. So if I count from the 1st of December until 28th February 2021, it is equal to 3 months. So on the new, using the cost, 65,000 times 18% times 3/12 equals 2,925. Now we need to find out the old or the remaining. Now if I look at the old or the remaining, remember, the machine was bought, the printing machine, on the 1st of June 2016. There's a reason why they tell you that. If I take 200,000 and I times it by 18%, my depreciation is 36,000. Immediately you should realize the following. If I take that 36,000 and I add it to the accumulate in the beginning, it's going to be more than the cost. My accumulate cannot be more than the cost. So what do I do if this happens? We calculate the carrying value in the beginning by taking the cost minus the accumulate. So my carrying value is 29,000. Now, again, if I compare that carrying value to the 36,000, the depreciation would have been more than the carrying value. So what do? To calculate the depreciation, we have to take the carrying value in the beginning minus the carrying value at the end equals the depreciation. So what is my carrying value at the end? We always say the asset can never show a negative or a 0, so therefore the carrying value should be 1. So now they specifically say to you, bought a printing machine. That refers to one printing machine. So it means that the carrying value at the end should be 1. A reminder, in the previous activity, we had 3 computers. So we said the carrying value at the end should then be equal to 3. It's always times the number of items or assets which you've got. So to calculate this, we're going to take the book value or the carrying value in the beginning minus 1, and that equals your depreciation. So my total depreciation is the 2 added together, the new plus the old. So number 4 is 31,924. When we're looking now at the tangible asset note and we complete the answers on our tangible asset note, it's important to take note. Disposals will always be shown in brackets. When we look at depreciation, it must be shown in brackets. If there's no brackets, you will end up losing the mark. Additions, no brackets. If we look at the answer booklet, it doesn't matter. If you look at number 1, the answer is 400,000 and they specifically say ignore brackets. So it's irrelevant if we're completing calculate the missing figures in this format. Please take note, you have to show your calculations. If your final answer is correct, it means that you get full marks. We mark the answer first. And if your answer is wrong, then we go and we look at your calculations. So for you to earn part marks or to earn any marks, always make sure that you show your calculations. Now that we've completed this activity, remember I said to you, I'm planting the seeds and I'm going to put water on top of that every single time. Fixed assets is a topic integrated with the cash flow statement. So cash flow statement, we look at inflow and outflow of cash. So part of the cash flow statement will be the fixed assets where we need to find out what was our investing activity, what was the inflow or the outflow of cash. So we're basically looking at our movements. So if we start with the disposal will be the proceeds from the sale of assets. So now to find out the total inflow of cash, we will need to add the land and buildings plus the vehicles, and that will be the total proceeds. If we look at purchase of non-current assets, we will need to look at our additions. So the land and buildings plus the vehicles plus equipment means that our purchase of tangible assets was 1,215,000, and this will be an outflow of cash and must be indicated in brackets. Now I'm going to add another element to the cash flow statement. We haven't done this before. In cash flow statement, we need to eliminate all non-cash items. So depreciation is an expense which is a non-cash item, which means that in the financial when completing the cash flow statement, we will need to eliminate the depreciation as well. Thank you very much for taking the time to watch this activity. This was quite a challenging activity, and I hope you have now a better understanding of the fixed assets. Our last activity, we are going to focus on a problem-solving questions, is so that you can see how we can integrate fixed assets with problem-solving. I want to leave you with this quote: don't let what you cannot do interfere what you can do. I hope you have a wonderful day. Goodbye.